Greetings, this is Susie Cheston with the Center for Financial Inclusion, and I'm here to celebrate the launch of A Change in Behavior, Innovations in Financial Capability. I am delighted that as we launch this report, which has been a year in the making, we are joined by Elizabeth Ryan, the Managing Director of the Center for Financial Inclusion, by Colleen Briggs, who is the Executive Director of the Office of Corporate Responsibility and Global Philanthropy at JP Morgan Chase & Company, calling in from New York. We're joined by Carlos Lopez Moctezuma, Head of Innovation, Entrepreneurship, and Financial Inclusion for BBVA Bancomer, also Director of Global Financial Inclusion for the BBVA Group, and Carlos is joining us from Mexico City. We are joined as well by Magali de Varrax, who is Regional Project Coordinator for Fundación Capital and coordinator of the Lista initiative in Colombia, Brazil, Honduras, Mexico, and the Dominican Republic. Magali is joining us from Bogota. And last but certainly not least, and our latest person in terms of the hour, Ram Ramdas, the Managing Director and CEO of the Jana Urban Foundation. He also chairs the Jana Group's Customer Centricity Council and directs its Corporate Social Responsibility Program. And Ram is joining us from Bangalore, India. So we're very grateful to each of these speakers for joining us today. Their bios have been sent to you in an email along with a link to all of the report elements for A Change in Behavior. The report has a number of elements that includes an abridged version that has been put into a very handy PDF format and is a shortened version of the full report, which clocks in at 60 pages. As well, there are frequently asked questions, and that is a result of a series of roundtable conversations that we had in Washington, Mexico City, and New Delhi, as well as other discussions with experts. And a number of the vital discussions that occurred at those meetings have been captured into these FAQs. As well, we did a landscape survey of financial capability building practices in Mexico, and likewise one in India. And for those of you who want to go straight to what are these innovations we've discovered, we have a catalog of innovations, as well as an executive summary. So there are many report elements, and we invite you to look at the ones that are of greatest interest to you. And again, the links, the hyperlinks for these were sent to all registered webinar participants by email. Without further ado, I'd like to invite Colleen Briggs to launch our conversations today. Colleen, as I mentioned before, is with JP Morgan Chase & Company, and we're very grateful to JP Morgan Chase for its sponsorship and partnership in this research project. So Colleen, tell us a little bit about why JP Morgan Chase decided to focus on this area of financial capability.
Great, thanks so much. And thank you for everyone who's joining this conversation and for everyone who helped contribute. You know, Axion's just done an incredible job documenting some of these best practices, but really a lot of folks who are on this call as well as others helped contribute. And so we appreciate all the input. And, you know, for everyone on this call, I know many people know that the scope of the problem is just massive. You know, billions globally lack the tools and the information they need to manage their financial lives, weather unexpected emergencies, and meet their long-term goals. And so for us at JP Morgan, you know, why we focus on this issue is that we see financial inclusion as an element of inclusive economic growth. So we know that it not only helps at the household level by helping individuals start and expand businesses, invest in education, and increase their own resiliency, but we've also seen that it helps reduce poverty, inequality, and it's also catalyzing inclusive growth. So it's really core to our business to really, we have a vested interest to really get this right. And what we had seen was that most of the efforts to date had shown that, you know, to focus on financial inclusion, we were seeing a lot of funds being put into financial literacy programs that focused on knowledge gains alone. So how do we help people just know what they should do? And what we found was that, you know, research is showing that financial literacy alone does not really help improve financial decision making or result in the long-term behavior change that we were really seeking. about our own lives. You know, while we may know we should eat better or save more, we often see life gets in the way. At least I know for myself. But imagine how much more complicated that is when you're living in poverty. And, you know, research has shown that having a scarcity of resources can divert attention away, you know, away from sort of your long-term goals and financial health management toward more pressing short-term issues. And what we found is that, you know, traditional financial literacy efforts that are focused on, again, just increasing knowledge alone is actually the most ineffective for those who are the most vulnerable and who need it most in poverty. But where we are seeing some promise is that to be effective, the financial education and information should be timely, relevant, ongoing, as well as received at a point in time when they have the opportunity to convert that information into action. So for example, pairing it with a product designed around their needs. And what we're seeing is that innovations in technology and insights from behavioral science and design are helping develop better programs that are actually driving deeper impact beyond just knowledge gains to actual improvements in behavior. So for example, not just knowing that you should save, but actually helping people increase saving balances or increase the frequency of saving. We've seen the role that behavioral science, you know, that people often have intentions to improve their financial health, but many hassles or biases can deter them from, you know, acting on these intentions. And so there's a huge promise of understanding these behavioral factors, as well as just better understanding consumer needs so that we can all design better programs that are helping overcome them and really getting beyond just helping people improve their knowledge, but to improve their behaviors. And increasingly, we're seeing the role of technology to help us do that. You know, we can think about better ways to understand the consumer needs and preferences as well as these biases, and then design more relevant, actionable, and ongoing, you know, education and information partnerships with trusted intermediaries to really help people move again toward those sort of better financial habits and ultimately better financial health outcomes that we're all seeking. And I think what's really important is that we still are all learning. You know, more needs to be done to understand how do we leverage these insights and these platforms to deepen our impact. And while context matters, you know, we think that more can be done to better understand some of these emerging innovations and best practices to borrow and share and adapt to other markets. So we are committed to working with phenomenal partners like Axion to lift up these best practices and continue to experiment, learn, and share how can we improve our partnerships to promote financial health globally. And so I hope you all have an opportunity to read the report, and hopefully it sparks a discussion on how you can apply these lessons in your own community. And we're excited, again, to join the conversation today with leaders in financial capability to share their insights from their programs so you can see how this is put to work you know, with clients every day. And are just looking forward to hearing from other participants about your own experience. And hopefully you all can also share and contribute to this dialogue. So thank you again for joining, and thank you again for Axion and all the participants for all your work making this happen.
Thank you, Colleen. That was a wonderful way to kick off our discussion and frame the issues. And again, we really have appreciated our partnership with JPMorgan Chase on this project. And now you have teed up Elizabeth Ryan perfectly to give her overview of some of the findings from the paper. So Beth, take it away.
So just as some background on where the paper came from, it came from a lot of hunting all across the world to find out what was going on in efforts to build financial capability. We looked for innovations, both standalone and innovations that were embedded in financial service providers. We found about 71 different innovations, many of them in Mexico and India, because those were the countries where we focused. And then, of course, there were a lot of innovations that were uniquely in the U.S. that we felt needed to be highlighted, but could be adapted for a developing country context as well. We talked to at least about 100 people, 92 to be exact. And then we also benefited from the input from the roundtable participants. So there were another 100 people who participated that way. So really this effort is one that has the wisdom and thoughts of a few hundred people all across the globe. And so what we focused on as the real takeaways from this was to reiterate what Colleen said, the need to focus on behavior suggests that you need to understand how behavior works, and behavioral economics, behavioral psychology has been doing a great job of helping the world understand behavior better and the foibles that human beings are all prone to, the biggest one for this purpose being the huge gap between knowing and doing, which we all have. And one of the things that I thought in observing all the innovations around the world and looking at the behavioral principles that are coming out of behavioral economics is, one, many of the innovations are still small. They're still in pilot. And two, often it seems complicated and daunting. You start to go into some of the descriptions that behavioral economics has of the way that people, of inherent biases, and you kind of get lost. So we wanted to look at how could this be massified? How could this be spread faster? And so we thought that it would be very helpful to really distill the behavioral lessons into some key practices, and then to look at how those practices are being applied in innovations that we see. So we've stripped it down to 7 behaviorally informed practices that show great promise, and we'll spend most of the time in this session talking about those behaviorally informed practices, but I'll just introduce them now here. The first one is the teachable moments idea, which is that people are most likely to be able to use the information if it's given to them at a time when they are actually making decisions. And we put this one first because it has huge implications for how resources should be allocated to financial capability building. One, it suggests that providers should be much more involved, because providers are the ones who are present when consumers are making financial decisions, either signing up for an account or conducting a transaction or deciding to purchase an insurance policy. So that is the best teachable moment available, and to let that moment go by without supporting the person making the decision with financial capability support is a real missed opportunity. The other implication of teachable moments is the idea that the biggest, most important financial decisions are made when people are also facing major life decisions like health crises, like deciding to go back to school, immigration, things of that sort. And so that also suggests bringing in organizations that are assisting people at those key life moments, like health clinics, or immigration agencies or social service agencies. And so, for example, that's one reason why Magali is here representing Fundación Capital, that works with people who are receiving welfare benefits. So anyway, teachable moments. I guess one thing to pause and note about teachable moments is also the most controversial of the principles, and that's because many people are worried that banks will just use the teachable moments as marketing moments, as I think Susie called it. And so that is a very real concern that I think we will address as we go through. But our bottom line is that we think that there's enough alignment between interests to be able to endorse a very major role for providers. So the next one is learning by doing, which is very clearly that when you put your hands onto something and make it happen, you'll remember how to do it the next time instead of just reading about how to do it. And so learning by doing is something that can happen either assisted or assisted by technology, as we'll see. I think when everybody thinks about behavioral economics, they think first about nudges, reminders, and default options. And this is the one that we think this should be in every financial service provider's toolkit. It's not that hard to embed nudges, reminders, and positive default options into the design of products and into the customer interfaces. Rules of thumb means, make it simple and action-oriented. So one action-oriented message is much better than a lot of text. The two of the last are kind of clear, making it fun and making it social. Those are both appealing to the way people actually work. You learn better when your emotions are engaged, either because you think it's fun or funny or it's emotionally gripping in some way. And people are very social beings, so if you can pull social relationships into it, such as teachers involving not only the children but the parents, peers teaching each other, and then finally customize it. And here's of course, you're going to have much more effect if you are able to help somebody understand their very own financial situation and look at their very own options. And we're really enthusiastic about the way that technology is supporting the ability to do that. I think I'm out of time, so we need to hear from others, and I'll stop there.
Beth, thank you so much. That was a terrific introduction to the 7 behaviorally informed practices that have been identified. And now let's jump into discussing how it works when they're actually being put into practice. So the first one, as Beth said, that we feel we'd like to emphasize is teachable moments, reaching consumers when they're making financial decisions. So Carlos Lopez Moctezuma from BBVA Bancomer is joining us from Mexico City. Carlos, kick us off with an explanation about how this works from BBVA Bancomer's viewpoint.
Yeah, thank you, Susie, and thanks to all for attending the seminar. First of all, I think it's very important to have data about how clients are transacting and are behaving around their financial life, and that it's not easy. No, we are emphasizing in the last years and many of the developments what financial institutions are doing is to better understand how clients are behaving. And for that, you need a lot of new information that in the past you didn't have. And sometimes you would like to have real-time information for knowing what your clients are doing. Then there are different moments where you can reach the client in the moment he's transacting or doing a financial transaction, where you can get them, and there will be a teachable moment. For example, I will give you three examples of that. First, in the ATM. For example, we have a tailor-made product for the low-income people in the bank for lending them payroll advance loan. When is the best moment to do that? When they go to check their balance to the ATM. Then you can give them the alternative of withdrawing the money from their account if they have money at that time, or offering them a loan. But the loan, you should explain very fast and very easy how does it work and how can it help him. The other way, another example is when they have low balances in their accounts. You can start interacting with them through the SMS channel to tell them, okay, if in this moment you don't have money, the bank can lend you a part of your next payroll. Or there's another way. If you know that he's using a debit card in a merchant, in a convenience store, in that moment, you can send him another kind of information about how can they start using better the electronic means of payments they have, or sending them information of how they can, instead of withdrawing money of the ATM, using a POS to make a purchase in the stores where they used to go. Then all of those transactional moments are good moments to teach them something about the products you are offering them, or about how they can improve their financial life using in a better way the products they already have. But for that, I want to emphasize the importance of having good data, good information, and sometimes real-time information about what clients are doing, because if not, you will never find those teachable moments.
Carlos, thank you for those very clear, specific examples. And I'd also like to turn to Ram Ramdas in Bangalore. Ram, tell us how Jana Lakshmi is carrying out these teachable moments.
Sure, Susie, thank you. Thank you again for having me on the call. At Jana Lakshmi, just to give you some context, we have 5 million plus base of women customers who are customers of our, what we call our small batch loan product. And incidentally, we add approximately 400,000 every month to that base. For most of them, carrying cash in large amounts can pose a security risk in some parts of the country. Also, cash tends to get spent on immediate expenses or be used by other family members. We see that fairly often. So we decided to tie up with Visa to disperse the loan amount directly into an account that can be accessed through a debit card, and it can be used at any ATM. The challenge, however, was that how do we encourage these women to actually visit an ATM and not share their card or PIN with someone else? There was also the issue of having to deal with the fact that they felt that an ATM wasn't really for them. And and they didn't know how to ask for help when transacting at a machine. So here was an opportunity, a teachable moment, if you will, based on customer insights from in-house research. We made a short film clip, which is shown to our customers just before they leave their branch with a card that's been loaded with their loan amount. So this is an animated film. It's not very long, does not use any language, and transcends the barriers of communication, or actually miscommunication, if you will. So the clip is shown just after the cards are handed over, and this is followed by a brief informal Q&A to test their understanding, and off they go. So this, to me, as I thought about examples, and I could talk about one or two others, but for the sake of time, I think this is probably the one I would pick to sort of illustrate this particular principle.
Thank you, Ram. That's a great example. I want to talk with both Carlos and Ram about this issue of that Beth mentioned earlier about, aren't these teachable moments just marketing moments? As we've had our conversations with experts about our research findings, this has been the #1 issue that has been raised again and again, that reaching consumers at the right time may be the core approach, but isn't there a conflict of interest when providers deliver financial capability interventions? So, Ram, since you've just been speaking, I'll kick it to you to see what's your justification for this? How do you avoid having this be a time when you're exploiting consumers rather than helping them?
Sure, absolutely. And I would call this literally the million-dollar question, Susie. To my mind, this is probably the biggest hurdle that we need to deal with as financial service providers. And I sort of talk about or remind myself constantly about the hubris that can set in amongst FSPs. you know, especially when they're dealing with the underprivileged and so on. So it's an interesting question. So to my mind, financial capability really at the end of the day is the combination of ability, but also the freedom to exercise choice. So therefore, as a financial service provider, if we are equipping a customer with sufficient information, including how they should assess and compare products, it should reduce the danger of becoming, you know, as you call it, a marketing moment. There's also the counter risk that FSPs might pose, i.e. that we are losing customers by empowering them to this extent. So I guess the answer, if you will, lies in creating a customer-centric business, and that's one of the reasons why, right along with financial advisory, we have our customer insights and customer-centric business very closely aligned to make sure that the products and services that are being provided are indeed in the best interests of the customers. And I'll talk a little bit later about the need to dialogue with customers and not just talk to them. And I think, but this is something that we need to continue to be very careful about and watch ourselves as we do this.
Thanks, Ram. And Carlos, BBVA Bancomer is a commercial bank. So how does this issue work for you from that perspective of being a commercial bank and yet trying to integrate financial capability building into your work?
Yes, Susie, and I agree with Ram that it's a very difficult balance to get there. But I think a financial institution like this, and I think many of the big financial institutions have very clear conduct of business rules with their clients. I think you should have very clear principles of how to approach your clients in order to provide them enough information, and you should be very transparent with the information that you are providing when you are offering a new financial services to them. On the other hand, if you are just doing marketing, you can saturate the client, and we have seen that, and we have maybe have some mistakes in the past, no? And you learn with when you launch new products that you cannot just have this marketing that saturate the client. If you are trying to just to sell and not providing them enough information about what you are selling, or it's not enough for them to take a good financial decision, at the end the client will or cancel the relationship with the bank, or when he's saturated, he won't even read the messages that you are sending them. Then for that reason, I think institutions should be very careful in the way they are sending information to their clients and trying to get this balance between what they are trying to sell and the way they are trying to sell it, and trying to provide enough and very transparent information about the conditions of the products they are trying to sell, and trying to sell products that are a good fit with the client, because sometimes there would be a mistake of trying to sell products that it don't make a good match with them, and then there is when problems start, because at the end, if you really push for a bad sale, the client won't be satisfied, because you won't be satisfying any need that they really have. Then for that reason, this thing of having a balance between your marketing efforts and the way and the product you are trying to sell, it takes a lot of relevance in this.
Carlos, I can't help but reflect as you're speaking that your experience not only at BBVA Bancomer, but also at CNBV before there, and as a member of the Smart Campaign Steering Committee, has stood you in good stead for answering this kind of question, because it's a terrific balance of looking at the commercial interests of the institution and at the same time these other issues of consumer protection and transparency. So thank you for that perspective. I just very, very quickly, I want to say something else about one of the other issues that's been raised in our roundtable discussions, which is, look, financial service providers have a hard enough time trying to reach the base of the pyramid. There are enough challenges. How can we ask them to become financial capability experts as well? And so one of the things that's been raised is the role of third parties. It's not the only answer. But Carlos, perhaps you'd like to give an example of how you've addressed that issue of the financial capability expertise on top of your other work of just delivering financial services.
Yes, I can mention one example of what we are doing in terms of using third parties. Sometimes it would be very arrogant to think that the bank by itself can do everything around the client. Then there are some ways to support your work with specialists or specific providers for trying to reach the client in a better way. And we have been working, for example, with Juntos. Juntos is a startup company, an artificial intelligence company that have a bidirectional communication channel through SMS to reach the client and trying to change behaviors. And I think having a company like this working with you with behavioral techniques and having an algorithm of artificial intelligence that can really be adaptive and can personalize the conversation with each of the clients that we are reaching through that channel, it has been very useful. And we have seen good results of doing that. We have been able to change the behavior, increase the use, for example, of electronic channels with our clients of the base of the pyramid. We are changing the behavior in terms of the use of electronic means of payments. And we will start using the channel for teaching or trying to change other kind of behaviors from our client base in the bank. Then that's an example of a good partnership between a startup and a bank.
Thank you, Carlos. This is Beth. I just wanted to note that in the paper there are references not only to Juntos, but to a number of other organizations that financial service providers can reach out to for assistance in implementing programs of this type. And it's not always easy for a financial institution to prepare itself to implement these principles, and there are a lot of organizations that are standing by to work with them on that. And so just check with our catalog of interventions or the paper.
Thanks, Beth. The next behaviorally informed practice is learning by doing, practicing using products. So there are a lot of barriers to customers when using a new financial service or using a new technology. Certainly digital financial literacy is another issue that we've heard again and again. And Fundación Capital has apps that help customers learn by doing. We're really glad that Magali de Varax, who leads that effort for Fundación Capital, is joining us from Bogotá. Magali, how does this work, and does it really make a difference? Magali, see if you're muted on your end, and we're seeing if we can unmute you too. Okay, so we're going to see if we can figure out a way to get Magali back with us. I know she has some terrific things to say, and we heard from her earlier right before the call started. So Magali, we'll start seeing what we can do on our end. But why don't we then move ahead to the learning by doing, to the nudges, reminders, and defaults while we're trying to see what we can work out with Magali. So the idea of nudges, reminders, and default options is what Beth referred to in the opening presentation about timely reminders and default options that support good habits. And this is where every single one of us has good intentions. I do, but I fall short all the time, and I think that's true for all of humanity. And one of the learnings of behavioral economics is that there's a lot of value of timely reminders. So Carlos, this is where we're going to kick back to you. because that's something you mentioned your work with Juntos, and I know that's one of the things that you've been doing along with Juntos. So can you give us a specific example of how you're using reminders and default options and any evidence you see that works? And this is where we'll ask you to be very brief because we need to keep moving on with our explanation of the 7 practices. So Carlos, give us an example, please.
Yeah, sure. I think the example of what we are doing, we have a new app that we are launching for our clients, and we call it financial checkup. And the financial checkup is it's enabling the Bancomer's client base to identify the state of their personal finances, to obtain timely and specific recommendation, and select tailored products or services which support the accomplishment of needs and goals. And I think it's you are seeing there in the presentation some of the screenshots that we are having with that, just to give you a sense of what we are planning to do. We have not launched this app yet, but we will be launching it very soon, and it will be a part of our mobile banking platform that we already have. Then the clients, before taking, for example, a new credit, a new loan from the bank, that they can take it also from the app. First, they can check their financial health. And checking that, we will tell them, okay, you are you are in a good fit. Yes, you have enough capability and to take a new loan, or you can take it, but you will be very constrained for future projects, maybe that you can start. Or no, you are in a bad health. You should go to one of our branches to talk with one of our executives to help you to make it better. Then that's I think a good example of the things that we are doing, interacting with the client before they take a financial decision or they buy a new product. We are trying to show them how they can take more informed decisions and understanding how their financial health is.
Thank you, Carlos. And I see in the 3 screenshots we have that somebody can have excellent health, they can be moderately healthy, or they can be in critical conditions. So it's great to have something that's a very simple message like that. And that shows that a lot of these behaviorally informed practices, in fact, are cut across the different divisions we've created. So it's another good example of customizing it, and it's also essentially a good rule of thumb because it's a very simply expressed message. So we're going to go to the rules of thumb heuristics element, where we use mental shortcuts that help turn learning into habit. And one group I know is doing a great job with that is Janalakshmi in India, and Ram Das calling in from Bangalore. Tell us about one rule of thumb that Janalakshmi is using.
Sure, Susie. So whenever I think of financial heuristics, I'm reminded of an example which to me is very evocative of what that whole concept was all about, and that is when you need to instruct people about the importance of hygiene at home and making sure that they wash their hands before they deal with food or cook in the kitchen. One could get into a long-winded exposition on germs and how they travel and so on, or one can very simply say, wash your hands before you cook. So that to me is sort of a telling example of a rule of thumb that is short, pithy, direct, and one doesn't tend to forget it easily. So, but moving on, through several years of working with microfinance borrowers and watching their transition into small enterprises, the one thing that has stood out for us is the correlation between what I call the degree of formalization of a business and the way in which they're able to separate their personal accounts from their business accounts. And from a provider's point of view, this is important to identify this threshold because it indicates the point at which business separates from consumer finance. And clearly, as we know in banks and financial institutions, we have different verticals that deal with each of these, the needs of a business versus that of a consumer, customer. So one of the rules of thumb we use, very simply put, is what we call the left drawer for personal, right drawer for business. So just if you were to imagine sitting at the desk and you have drawers on both sides, and you just designate one set of drawers for your personal funds, the other for business. And borrowers who have migrated upwards to an individual or a business loan category are asked to, very importantly, pay themselves a salary, their imputed cost of their time that they put into the business, and to manage their personal expenses within this salary. So the salary is placed in a separate box, and household cash inflows and outflows are accounted for in this box, and let's call that the left drawer. On the other hand, business-related inflows and outflows are managed from a separate box, and you see that up on the screenshot, and we call that the right drawer. So basically, what it does over time is helps in accounting, taking the enterprise closer to what we call that a threshold of formalization. So our financial advisors use simple yet very evocative visuals to help customers identify what constitutes personal versus business income and expenses. That too, I think, is important. For instance, if you were to say bills for the shop or an equated monthly installment on a business loan go under business expenses, something like travel costs, fuel costs, house rent, clothing, groceries, etc., go under the other category. So that's the example I would use for heuristics.
Thank you, Ram. And Magali, are you on now?
I am.
Yay, wonderful. Thanks for joining us back again. So we're switching back to the learning by doing practice. And tell us a little bit about Fundación Capital and your work with putting learning by doing into practice.
All right, so sorry everyone, looks like my computer had decided to take control for a few minutes. So in Fundación Capital, basically we have like a large experience in financial training, and the initiative comes from implementing financial training in remote areas through a more traditional format by having teachers in organizing training sessions. And what we have seen doing that is that this represents high costs, both for the organization implementing the training, but also for people going to that training and like leaving their business or leaving their family and having sometimes large transportation time. So from this, we've started to think of an innovation, something that could allow us to offer a scalable solution. And also what we've looked with that initiative is to leave a little bit the format of someone sitting in a training and listening and not necessarily practicing. So we came with several ideas, and the one that we ended up developing, we started 4 years ago, is Lista. And Lista basically works through an app that we're currently mostly using on tablets, but we're about to start with smartphones. And this app works offline, doesn't need any internet connection, and is really designed for someone who has never used an app in his life, who has never used a tablet or a smartphone, right? And so what is the idea with this application? It's basically to be able to offer to users a financial training that is really dynamic, interactive, and has very practical sessions. So the example you're seeing right now is an ATM simulator that we have inside the application, and you can practice everything you can do with an ATM. We have the same thing with mobile banking inside the app. You have moments where very practically you have to define savings goals and follow on the savings you're going to do for these goals. We are currently using this application with people receiving welfare benefits, as it was mentioned before, and also bank clients. The idea is to really having people practice in the app things that they have to practice anyway to use the financial products they already have access to. And what we have seen with that is that the fact that people can not only learn something but also develop very practical skills is sometimes a relief when you think that, for example, in the case of these people who are receiving the welfare benefits through a bank account, through a mobile wallet, sometimes they don't know how to use an ATM, and because of that they have to pay someone to do the transaction for them. Or it creates a lot of stress to be receiving your benefits through a financial product you don't know, and this can end up creating exclusion toward the products rather than the client actually taking advantage of this product. So that's the application. It has been a long process of developing the content and doing like several co-creation moments with users. Lista has been using by more than 100,000 users so far in the world, and we're currently undertaking an impact evaluation to have very, very scientific, concrete results about the impact this is having on users.
Thank you, Magali. And we're going to skip ahead back to the Customize It. And at our roundtable in India, this practice of finding ways to personalize interventions was found to be the most important. We're not going to spend the time talking about this one right now because we're a little bit behind schedule. But I did want to mention that there's a Kaleido tool that has been used by Jana Lakshmi. And this is one of the many innovations that we talk about in our full paper and in our catalog of innovations. And so we invite you to spend some time. It's really a neat tool and an example of the kind of innovation that the Jana Urban Foundation with Jana Lakshmi has been implementing, really looking at innovative ways to move these concepts forward. And there's also this slide, which we were grateful to receive from Fundación Capital, called Metas. And again, it combines the principle of making it fun with the customizing. But I'm going to move ahead to the making it fun practice right now because humor activates the brain's reward system, and that helps with motivation and memory. And I know Fundación Capital has been able to take the stress out of learning by making it fun. So Magali, can you just tell us 30 seconds about this next cartoon that we're looking at?
Okay, so something that we've discovered developing the content and having all these feedback sessions is that people love stories, right? All of us love stories. And so because of that, we really try to develop in the application a lot of moments where you just see a really concrete example of someone you can identify to, and you would see her stories. You have the same thing, we did the same thing with videos with real people. So all these peer-to-peer learning mechanics is working very well as well.
Wonderful, thank you. And the next and final practice of our 7 behaviorally informed practices is make it social. When we were in Mexico, this was the one that was found to be the most important out of the 7. And we've certainly found examples of how that works with lending and savings groups, extended families, workers in their places of work, social media, etc. And all of those help customers stay true to the financial behaviors they want to achieve. So Fundación Capital has some examples of that. And here's a beautiful photo of one example of a family looking at these issues. I know Jana Lakshmi has a number of examples of this as well, but I want to move to Carlos again from BBVA Bancomer because I know you've recently introduced Tandap. So, Carlos, can you just give us a 30-second description of this and how it fits with the Make It Social concept?
Sure. We created this app because, okay, Tandas is a very common group savings mechanism that is used not only in Mexico, but also in the rest of the region. And we wanted to provide, and it is not for our clients, it's an open market application for Android that people can download, and it's a tool to organize Tanda. And you can use your social networks to organize it and to sign in to this app. And we have seen that even when we can think that some people in the segment are not using social networks, the use of social networks, it's increasing in the low-income segment. Then we have discovered that providing the market with a tool like this for organizing tandas, it's for managing them and to create your own communities there, could be a good way to provide a social tool for the low-income people. And actually, now we are not trying to sell anything. The app is just for providing a tool to people to organize these group savings. And in the future, of course, we can start offering another services through this app for facilitating the way in which people is moving money within their groups. But now it's just something that we wanted to provide to the market.
Wonderful, thank you. And we're now going to turn it to Elizabeth Ryan to talk again about the 6 recommendations that come out of our research. So the closing minutes of our webinar. So Beth, tell us about these 6 recommendations.
Yeah. Great, thanks. Well, I think you can see from these wonderful examples how many opportunities there are to build financial capability into the active mode. And that leads, the recognition of the importance of this leads us to several recommendations about how should resources be allocated to financial capability. Because right now, if you just were to step back and say, where is the money being spent? Most of it is being spent in traditional financial literacy programs. And so we're calling for a major reallocation of those resources. And we'd like to see, first of all, major reallocation of those resources towards providers being more active in providing these kinds of supports. And in the paper, I don't have a chance to go into it now, but in the paper we look at some of the things that providers need to do internally that would equip them to be able to do that, because it can be a new area for them, and it takes some background, as Carlos said, data analysis, and training of frontline staff in order for them to be able to do that. Second, we need to be clear about what the government's role is, and clearly government is often seen as responsible for financial education and financial literacy, and we think that government does have a huge role, first because it interacts, and Fundación Capital is an example of that. Those people are receiving government benefits, but also because government has a very big responsibility for consumer protection. And so one of the government's big roles is to make sure that customers have the information that they need to be savvy consumers. Finally, also, we do think that classroom training that's informed by these kinds of principles is important for K through 12 education. That's something that is going on all over the world. Third, we just want to engage all these social service agencies that are involved in major life decisions, and we have some great examples. I think we skipped over one of those, or there's one in the paper that works with people who are visiting health clinics called Kiwi in Mexico. there's just a huge opportunity there. It's been really well developed in the U.S. And there, for example, the Consumer Finance Protection Bureau has toolkits for social service workers. Next, the next big recommendation is that if these principles are applied to traditional financial education programs, they would make them much more effective. And so we'd like to see all those efforts that still go on that are somewhat more classroom and traditionally based to begin to reorient themselves to be able to incorporate these messages. Finally, the last two, one is measuring results rigorously. We see that a lot of these efforts that are informed by behavioral principles are still in fairly new stages, and we still need to know a lot more about what the impact is and continue learning about that. And measuring the results is also very important for building a business case so that it will be attractive to financial sector providers. They will know that it's worth working on. And finally, and maybe this should have been said at the beginning, but one of the things that all of these efforts should be informed by is the idea that people do have their own financial capabilities. They do not come as blank slates. They also have their own objectives. And so it's a general comment on how to design these efforts. They need to be designed in a consumer-led way that acknowledging the existing capabilities and the variety of objectives that people have.
Thank you, Beth. And now we go to a lightning round back to our guest panelists to look at what they think are the most important things they've learned about building financial capability, just to close out the webinar. So again, we'd like to thank Colleen Briggs of JP Morgan Chase for her support, and then turn it to Magali de Varax to give her comment. Magali, do you have 30 seconds of wisdom for us?
I do. Yeah, maybe my last word would be about what we learn is the importance to empower people and how powerful this is. So when we're talking about finances and people living in poverty and in a lot of stress, and that all their life they're being told basically you can't, when you started really working on actually you can, this is very powerful. So the importance to always think of this empowerment side.
Wonderful, thank you. And Colleen, let's go back to you, and would love your 30 seconds of wisdom.
I would just reiterate the importance of taking these principles and adapting to your communities. And what's really going to sort of coalesce the strategies is focusing on the outcomes that we want to achieve. So if we can really think about tracking what are those behavior changes and how can we coalesce around that, then I think that there's a huge opportunity for us to better understand how we move from just knowledge gains to real, better financial decision making and better financial habits.
Thank you, Colleen. And Ram Ramdas.
Sure, I would echo what both of them just said. I would add that customer insights is a very important aspect of developing financial capability. One needs to make high investments in terms of time, human capital, and research in getting strong customer insights, and also the importance of having a dialogue rather than just speaking to the customer or talking down to the customer. I think we need to also understand that this is not a simple process. It's not going to happen overnight. It's a journey. So let's stay the course.
Excellent. Thank you, Ram. And Carlos, you have the final word.
Thank you, Susie. Just three points. I think one, the relevance and the importance of this document of understanding and using behavioral tools for better increase the capabilities of our clients. Second, the importance of improving our capacity as financial institution to use the clients' data for improving the way we approach them and the way we create products that really satisfy their needs. And finally, don't forget having a balance and having good principles in our institutions about consumer protection to get a balance between our marketing efforts and our interest in having good products for our clients.
Thank you, Carlos. We've really been grateful to each of you for joining us for this launch of a change in behavior, innovations in financial capability. And we have many elements found at the website of the Center for Financial Inclusion, and you can see the list of them here. Everyone who's been registered has been sent hyperlinks to each element, and I believe those are being put up on the screen as well as we speak. I'd like to thank Julia Arnold and Elizabeth Ryan, who are the co-authors of this paper, Magali de Varrax of Fundación Capital, Ram Ramdas of the Jana Urban Foundation, Carlos Lopez Moctezuma of BBVA Bancomer, and Colleen Briggs of JP Morgan Chase, and especially to thank once again JP Morgan Chase and Company for their partnership that made this research possible. Thank you so much, and may you build capability.